Hello everyone, this is Ankita Mishra and welcome to my channel CS Diaries with Ankita. So today I'm going to explain about the sweat equity shares. Yes, both as per Companies Act as well as SEBI regulation. So watch this video till the end. So let's learn about the sweat equity share. First, it is defined under Section 2 subsection 88 of Companies Act 2013. Next, it means a equity share issued by the company to their employees or directors at a discount or consideration other than cash for their know-how or making available rights in the nature of intellectual property right or the value addition. And the next is the criterias are defined under section 54 of Companies Act 2013. If you are going to issue a sweat equity share, so it must be authorized by the special resolution. If your company are listed, so they must follow the SEBI regulation. If they are not, so they must follow the Companies Act or their rules prescribed. Now, just have a look on the definition of employee as per the Companies Act. So, they must be a permanent employee, India or outside India, or director of a company, whether whole time director or not, employee or director of subsidiary of the companies above described, whether they live in India or outside India, or employee or director of a holding company of the companies prescribed above first and second point. Now let's talk about as per the SEBI regulations. It will be applicable to the listed company or the employee of a company whether in India or outside, or director of a company whether whole time director or not, and the maximum quantum will be they shall not issue more than 15% of paid up share capital in the financial year, subject to the overall limit of 50% of paid up share capital. Now the next is a special resolution. For this purpose they must send a notice with explanatory statement for general meeting as per section 102 of Companies Act 2013. Each issue of sweat equity shares shall be voted by a separate resolution, and note it down, the resolution is valid for 12 months only. Now, the next point talks about the valuation. So, it must be done by a merchant banker and he must obtain certificate from the independent chartered accountant. And the accounting treatment, yes, non-cash consideration if it is an amortized asset or depreciable asset. So, carry that asset to the balance sheet. But if it is not amortizable asset or depreciable asset, so carry the entire amount as an expense in the profit and loss account. Okay, let's go on the last point, that is procedure for issue of sweat equity share, and it is very important from the point of view of exam as well as when you are going to do your training. So these things are very important. First, before board meeting, decide number of shares, current market price or consideration, etc. Next, send notice of board meeting to all director at least 7 days before the meeting. Now, next is convene board meeting of agenda sweat equity share as well as the proposal for the general meeting. Next, file form MGT 14 with board resolution copy within 30 days of board meeting. Next one is hold the general meeting, but before that, notice of general meeting to be sent to the shareholder, director, auditor at least 21 days clear notice. Now hold general meeting and pass a special resolution by 3/4 of the majority. Next one is file form MGT 14 for passing SR. Now, convene board meeting within 12 months of passing a special resolution for allotment of sweat equity share. Now, the next step is file return of allotment in form pass 3 with ROC within 30 days of allotment. Next step is to apply stock exchange and obtain necessary listing and trading approval from the shares allotted. Next and the last point is in the general meeting subsequent to the issue of sweat equity share, the board of directors shall place before the shareholders a certificate from the secretarial auditor of the company. So this is all about the sweat equity share. Don't forget to watch the video on SM Read on my channel, and for more such information, like, share and subscribe. See you studies with Ankita. Thank you.